Welcome back. Now, the gold price may be steep, just having hit another record high, but the safe haven appeal of the yellow metal amid geopolitical uncertainty is still driving its shine as far as demand is concerned. During the third quarter, demand for gold in value terms hit its highest level for quarterly demand on record. This according to the World Gold Council's latest gold demand trends report. Krish Gopaul, senior analyst for Europe, the Middle East and Africa at the World Gold Council, joins us with more insight on the trends. Krish, thanks so much for your time this afternoon. I mean, at this point, I feel like I sound like a broken record, another record quarter for gold, and investment flows still driving demand, right?
Yeah, very much so. Well, what we saw, as you say, was a record quarter for gold demand in Q3. And it's the strongest level of investment that we've seen for quite some time. And you're right, we've seen a lot of that for much of this year. We've already mentioned the gold price rally up, 50–60% so far this year. And that was really kind of evidently driven by investment, again, product agnostic. Whether that's bars, coins, or ETFs, we saw it across all segments and across all geographies too. It really was a very strong picture. So all in all, it was an incredible quarter for gold.
And sticking with the investment theme, do you think there's too much money in the market, too much liquidity in the market? Because both equities and gold are sitting at record highs, even though typically these two asset classes don't rally together during volatile times.
Yeah, I mean, it's certainly very interesting market conditions, and understandably, there's been a lot of chatter given how quickly the gold price has reached these new record levels. And we have seen a slightly healthy correction in the last few days.
Yeah.
So it's understandable that people will be interested to know whether gold has been a crowded trade. But what we're seeing, at least from the report and kind of the little bits of information that we have so far going into Q4, is that demand still seems relatively healthy. I think the environment that we're in and the backdrop that has really been propelling these gold investment flows still remains very much in place. The idea that there's still ample safe haven buying, there's still US dollar weakness. And again, just that FOMO, fear of missing out effect that's kind of led to a number of people get involved in gold in the hope that the gold price is going to continue going up.
And while the fundamentals remain upbeat, as mentioned, we are seeing money flow across markets, whether it's riskier markets. We're even seeing it in cryptocurrencies. And could this market exuberance perhaps start to weigh on gold's appeal as a safe haven, gold's appeal as, a hedging asset? Or am I just entertaining my own little conspiracy theory at this point?
Well, I think, look, we can only point to the information that we have. And certainly this year, I think it's very clear that many participants in the market still see gold as probably the key safe haven asset out there. The levels of demand and kind of reflected in the gold price that we've seen really have been staggering and caught many people, ourselves included, off guard. And so I think the market really has spoken that when there is that heightened level of uncertainty, whether it's macroeconomic or political, and that's still very much the environment that we're in, gold is very well supportive and kind of seen as that key diversifier for people's portfolios.
And let's zoom in further on some of the use cases, right? We are seeing central banks picking up. Are policymakers holding on to gold because of concerns around inflation or concerns around debt, particularly in the US, where we've been seeing that debt story playing out?
Yeah, I think they're all very key concerns that you mention. I think, when we've run surveys with central banks before, some of the reasons that they cite for holding gold are, as you mentioned, a kind of an inflation hedge, its performance in times of crisis, its ability as a diversifier, and the idea that it doesn't have any counterparty or credit risk. So all of those key reasons are very much still at play, given the environment that we're in. So it's probably unsurprising that in Q3 we saw a continuation of the trend of central bank buying. And our expectation remains that that's probably going to stay in place for some time.
On the flip side, though, jewelry demand hasn't quite kept up. On a quarter-on-quarter basis, though, key markets like India and China saw an uptick. Does that tell us anything about the consumer in China in particular, because we have been seeing concerns around the consumption picture in Beijing?
Yeah, I mean, you're absolutely right. Understandably, given the rally in the gold price and the levels that we're at currently, it's put a lot of pressure on the kind of the more price sensitive elements of the market, such as jewelry. That did drop in Q3 and has been weak for some time. But you mentioned the kind of the pickup. Actually, if you look at jewelry in value terms, actually, we saw an increase in the amount spent on gold jewelry, even if the actual volume of gold was lower. So it shows a willingness for consumers to spend more. And again, we see that across the various different markets. You mentioned China, for example. So in value terms for jewelry, Chinese consumers actually spent 9 billion, making Q3 the third highest third quarter on record. We track back to 2000. So there is still a kind of a level of interest in gold buying there, despite the fact that higher gold prices have acted as some sort of a headwind on those kind of consumer elements.
And have there been any changes when it comes to buying in terms of regions? We've been seeing a lot of buying from Asia and India. What are we seeing now when it comes to America as well as Europe?
Yeah, I think it depends on which sector you're looking at. Certainly on the investment side, buying has been fairly broad-based across geographies. It's a slightly different picture on the jewelry side. That's one more widespread weakness. But again, it depends. If you're looking at investment, I think the US in particular and Western markets are still looking incredibly healthy. And if you pick up on ETFs in particular, then even Eastern markets in that regard look very strong too. Similarly on bar and coin, with maybe kind of the Asian markets being a bit more dominant in that category. And as I mentioned on the jewelry side, yeah, that's pretty universal weakness.
Before we wrap up, Krish, where are you pegging gold at the moment? There have been some really bold calls, some analysts pegging it at $5,000 before the end of the year.
Yes, I mean, certainly it's generated a huge amount of chatter and headlines, and it continues to do so. We don't provide forecasts for gold ourselves, so it's very interesting to see how others are viewing the rally and the latest correction. Certainly what we can see from a demand perspective is that things remain very, very healthy, particularly on the investment and central bank side, and we continue to see that being supportive for gold going into Q4 and likely into 2026. Obviously, there will still probably likely be pressure on those consumer side of the markets, but overall we remain quite optimistic on gold overall.
Bullish on gold. Krish, let's leave it there. Thanks so much for your time and taking us through some of the trends playing out in the market. That was Krish Gopaul, Senior Analyst for Europe, the Middle East and Africa at the World Gold Council.